please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. So the fight is underway as far as the mid-caps are concerned. Just 11 points in negative territory. So it's been a remarkable sort of a pullback from the lows on that index. The Nifty, the Sensex and the Nifty Bank have not had such good luck today. That's the story so far. Along with Prakash Gaba and Mitesh Thakkar, we also have Prasanth Prabhakaran of Securities now joining us in the conversation. Prashant, what do you think of this mid-cap fight back after 7-8%, huge declines coming through? Do you think the worst of the selling pressure, the margin call issues, is all that out of the system, or is this just a temporary pause?
So according to us, it is a temporary call. The next 2 months will be a sell-on-rise market for any stock. So any stock which cuts the January 31st grandfathered price that is there will come in for selling, because you are going to save tax at least for the next 2 months. So anything that rises beyond your Jan 31st price, be it your large caps, mid caps, will continue to see selling, which will be large. So I don't think so you're going to have too much happening in the markets. All rises will be a sell on rise market.
Okay, that's interesting. Prashant, good afternoon. So, in terms of individual stocks today, we have seen a big move, for example, in a lot of these high quality mid caps like Ashok Leyland and United Breweries, NIIT Tech. Anything that you would keep on your buy list?
So there is no buying recommendation actually, Anuj. Unfortunately, the construct of the market has become such that if your January 31st price is there and it goes up, even say by a 5 or 6%, anybody who wants to save on the additional 10% tax that you're going to pay will end up selling it before March 31st. So any buy that you should do traditionally should be post this March 31st deadline of long-term capital going away gets into place. And post that also you have issues. The entire momentum of the market has come to a halt. You have elections that will come in, it will bring in further volatility. There is going to be enough leverage, non-leveraged positions which will be knocked off from the books. So there is a problem that is there, at least in the short term. Long term, I don't see too much of an issue. The large caps have shown results which are fairly robust, but short term, I think so that is going to be selling pressure that is going to be continuous.
Well, no pressure on some stocks today. Some examples would be Ashok Leyland, Future Retail. PC Jeweler has managed to get back a little bit of that lost sparkle. Speaking of PC, Mayuresh, what did you make of the whole saga? And, for people who've still been holding on to their stocks and wondering what this whole, value destruction is all about, what's the recommendation on PC? Any thoughts on Makranji whatsoever?
No thoughts on Makranji, absolutely, Surabhi. But again, I think on PC, what has probably transpired in terms of the treasury shares getting sold with equity investments that Makranji had done into it. And again, the logo probably appearing on Makranji's side, the con call which happened, which was an elaborate 15-18 minute con call that the PC management did. Post that, I think the next day the logo just disappeared. And again, I think the management of Makranji, as we was hearing on your channel in the morning, clarifying that there was no permanent agreement that was probably in place. Now, if you solely go by numbers and what has transpired to the stock, I think stellar set of numbers that PC has posted, even in terms of the franchisee showrooms or the top line, EBITDA and bottom line growth. I think they're on track to probably post that 20-21% kind of a mark figure in terms of growth, both on the top line and the EBITDA front. When it probably comes to the studded part of their business, 30-35%, which means that the margin protection is there. And the export component also probably doing well as per the transcript. So again, I think investors that probably hold on to PC, my recommendation is they can probably hold on to this stock.
Okay. By the way, the mid-cap index showed green. I think it would be the first time that it went into the green. It's now back into the red, but just 2 points. And the issue with advanced decline is, if you look at sometimes the absolute number is misleading, because if you see the lines as well, they're very, very near now. When you start so far apart, when you start at 1:27, 1:28, Surabhi, and so many stocks are down 10, 15, 16%. They are down 10, 15, 16% right at the first tick. So, if you see the intraday chart of the mid-cap index, for example, today's of course, it's been a bad day if you've been holding some of these stocks and the index itself opens about, say, 2-3% lower. But today's opening has been the low point, 19,150. And today, intraday, actually, there's a 600 point, 550, 600 point intraday rally in the mid caps, because the chart is telling you that at any point if you bought today, you're actually making a lot of money. Yes, if you bought the first fall on Friday, then you're maybe still making a bit of loss. But this sharp recovery in the mid caps today, I think, is really interesting. The problem is you don't know if this is that sucker's rally. That's something that we'll find out. But for whatever it's worth, today's day actually has been really good as far as the mid cap side is concerned.
Sure, absolutely. So on that note, let me take up a couple of these names with you, Prasanth. For instance, a lot of the liquor stocks, beer, liquor. We were speaking to United Breweries in the morning. Then, last week we had that news on Kerala doubling duties. Despite that, a stock like Radico has done very well today, UB itself. Any thoughts on this space?
So the sin space has been a space which has actually given returns which have been fabulous. ITC has shown a bounce back after a long time. Thankfully, nothing happened in budget at that point of time, but they have also diversified their model overall. As far as liquor stocks are concerned, the volume growth has been consistent. They have found newer strategies to end up giving them higher margins. They have brought in premium segments across board, be it UB, be it McDowell, be it Radico at that point of time. And I think so when you are under pressure with market crashes like this, you do take to the bottle. So I think so it's a stock to hold. You will have returns which will be consistent. Volume growth will continue to be robust over a period of time, irrespective of what are the prices that you end up paying for these in commodities overall.
Yeah, I don't know. I mean, some take to the bottle. Maybe some go for burgers. Maybe that's what's showing up in Westlife numbers. But anyway, that's on a lighter note. We've just got under 2 minutes to go before this day closes out. And guess what? Yes, there is finally a green tick on the screen on the key indices. The mid-cap index is in positive territory, 3 points higher. Anuj, what a fight back. Not an easy day, right?
Not an
but
easy,
at least for now.
Yeah, for now, they would, of course, be in, buying in quality names. Today's low would be now key to watch on the index and also on the mid-cap side. Because if you're a bull, what you don't want is that, this being a false sort of recovery and the market again resuming its downtick. But at lower level, there is buying. There's money which is chasing stocks, quality stocks, which is visible. It's not just slam dunk. Just go out and, sell whatever you want to sell. Even something like PC Jeweler, for example, has recovered. Intraday has seen a bit of a rally. But, Ashok Leyland, Escorts, the erstwhile market leaders, Surabhi. And again, the stocks which didn't fall really a lot. Ashok Leyland didn't fall in that correction. Escorts didn't fall in that correction. In fact, it's very close to its highs. NIIT Tech, for example. So some of these stocks, I think the market leaders today have really had a really strong day. But let's talk about the index, because what was really interesting was that today the index, while it recovered, still is closing with about 0.2% lower and 1.5% lower on the Bank Nifty. And the main reason for that was that big decline in HDFC. It's closing at the low point of the day. It's been phenomenal, that stock. 4% lower on a day like today. Larsen & Toubro was the other one. HDFC Bank, TCS, ICICI, Kotak, Indiabulls Housing, Bajaj Finance, UPL were some of the other stocks which were on the way down. On the way up, this news that came early in the morning about Bharti Airtel and that Singtel's infusion in Bharti Telecom, that stock was up about 5%. Tata Motors up about 4%. HPCL was up 2.5%. ITC was up about 1.6%. In fact, tell you something, this month ITC is one of the stocks which is in the green, which is remarkable, 3% higher for the week. So looking quite okay.
Yeah, absolutely. On the mid-cap side of the market, well, we will start off with the winners because that's the day. PC Jeweler 17% on the higher side. Radico Khaitan about 9% on the upside. United Breweries around 4%, final count of gains coming through for most of these stocks. Even USL managed to close out the day in positive territory. Let's get the last rates on United Spirits. There you go, about a 0.5% up move. Some of the ADAG group stocks started moving towards the end. Reliance Capital about 6% up. Reliance Power about 3% on the higher side. So there were some gains quite visible here. Sugar turned a bit sweet after the agencies put out a news report suggesting that the government is now looking at, taking duty curbs to ensure the oversupply in the domestic market doesn't get out of hand. So that kind of worked well for a lot of the sugar counters. Renuka 5% on the higher side. Jain Irrigation managed a 5% up move for itself. So good day for that one. Ashok Leyland, then we're talking about the real marquee blue chip names beyond the Nifty 50. So Ashok Leyland about 6% on the upside. We've got a 6% on Indiabulls real estate as well. Future consumer about 7% higher. Canfin Homes 7% on the higher side. Bombay Dyeing, look at that. Double-digit gains on Bombay Dyeing. 16%. Look at that stock go today. Quite a move on that one coming through. Dredging Corp, there's more news once again. The government is promising stake sale in parts. 6% on that stock and counting. Mirza International was a good set of numbers, worked well for the stock, about 6% higher. Speaking of decent numbers, of course, Westlife managed to go home positive. Let's pull up Colgate, because again, on volumes and on EBITDA, no complaints with Colgate as well. Those numbers look pretty decent. 0.5% up move there coming through. Finally, losers. I mean, day is not complete without the losers. So NBCC 6% down, Whirlpool lost ground, Motilal was about 5% lower. And then, of course, we have to end with Vakrangi, which was still locked in 10% down circuit. That's how it's kind of played out. So that's the day.
Oh, that's the day. So let's do one thing. Let's thank all our experts on that note. Thanks a lot for taking us through the market closing. Of course, we'll talk to Prakash and Vitesh tomorrow. But Surabhi, let's address Ashok Leyland's numbers.
Yes, that's right. So Ashok Leyland, which was quite a star in today's trading action, came out with a very good set of numbers for the third quarter. Revenue growth was led by volume growth, which was seen due to a revival in buying decision post the GST disruption. Gopal Mahadevan, CFO of the company, is now with us to get us through the fine print of the company's earnings. Thanks, sir, for joining in. Now, truck demand recovered quite sharply over the past 6 months. That's what we've been seeing. We heard that in your commentary even before the numbers. Now, what is the visibility on demand for trucks as we look at the rest of the year?
Well, you're right. As of, Q3, it looks like that, the MHCV industry seems to have turned the corner, because we had, I remember, a 32% decline in Q1. But as on date, on a cumulative basis, the overall TIV is about up nearly 10%. January was a pretty good month, and it looks like even February and March should be reasonably firm. So it looks like, the demand is at least going to be good till the end of the year. Typically, April, May not be great months because there is a little bit of exhaustion in the system. But our outlook on next year, I'm not giving a forward-looking statement, but our outlook on the MHCV industry next year is also that, given the level of infrastructure spend that's going to happen, we are reasonably positive about the MHCV industry next year.
Mr. Madhavan, just hold on. We have Tata Motors' numbers flashing on the screen. The JLR number, which is something that we were looking forward to. JLR EBITDA margin is at 10.9%, and the JLR pre-tax profit is 192 million pounds. So that's the, of course, number that we have on JLR at this point in time. Do we have the consolidated numbers as well? I think we should have the consolidated numbers flashing on the screen in a bit.
I have the standalone margin, because Sonia was telling us, I know, just a while back.
No,
right?
Before that, just, I have the consolidated numbers with, the PBT is 2,029 crore. I don't know if they've given the net profit as well. This is not a good number for JLR. The street thought that was perhaps possible, but 10.9% of JLR EBITDA margin is something which the street will not like, because we were expecting about 12.1%. And considering the stock rallied today, even though of course it's still way off its highs, but today the stock rallied a bit. Standalone numbers are good, but then standalone is not a large component of Tata Motors anymore. You're saying something, because we have Sonia also joining us. Yes.
Yeah, Sonia, your first thoughts. So 10.9% EBITDA margin for JLR. First thoughts there?
No, it's not a good number for sure, this 10.9% margins. But you know what? This is something that we were talking about earlier as to how the management was giving a lot of higher incentives because they were phasing out their old products. Oh, look at that. But they have a lot of hedging losses that they see because of the way the pound moves. So on the pound hedges, they make losses. So it's not really fair to look at the absolute profit number, but this margin number of 10.9% is something that will not go down well. It's a drop on a quarter-on-quarter basis. Last quarter, the margin was 11.8, and it's also lower than what the street was estimating. If you see that graph, they had touched a high of about 14.5%, but since then, since Q4, the margins for JLR have been on a downtrend. And Anuj, that is the precise reason why the stock has underperformed the entire auto pocket. It's one thing or the other. Either this quarter China has done well, but despite that, other markets like the US have not done so well. Higher incentives because of newer, transitioning to new products. The previous quarters, it was China was slowing down. So JLR is just just facing some difficulty, because of which the stock has also been underperforming.
Oh, yes.
So I have one qualitative line on JLR on the reason why there is a profitability impact. They're saying one is, of course, the phase out of the Range Rover Sport model that Sonia already alerted us about. And they're saying there's higher depreciation and amortization resulting from continued investment to drive profitable growth. So that the profit level margin, the profit margin level, they're saying that it's kind of taking a bit of a toll on the overall margins. Total investment in new products was about £1 billion in the third quarter.
So I'll tell you something, the forex loss is only 126 crore. So it's not as if, you know, they have made some big move on forex, and this PBT number itself is way below the estimate. So yes, standalone net profit is higher, but tell you something, this may not cut eyes. Also with, you know, Tata Motors, now the problem is that, you know, as we saw in a couple of con calls as well in the past, something or the other really comes up and they fall short on that JLR. I don't know, I could be wrong, but there's a good chance of the stock maybe testing its recent lows maybe tomorrow morning when the market opens.
Well, you know, I also want to point out that for the domestic business, they have spoken about a strong turnaround in the domestic business. But you know, if it's really the Jaguar Land Rover business where the EBIT has fallen quite a bit. They speak about how not only have the margins fallen, but their costs have also gone up, and there are tough conditions in UK, US and Europe. So, you know, the guidance with respect to some of their key markets is also quite disappointing. Tough conditions in UK, US and Europe is what they speak about. They say that there's cyclical weakness in UK and US, there's increasing diesel uncertainty in UK and Europe, and Brexit uncertainty in the UK as well. So this is not looking good as far as even the commentary is concerned from Jaguar Land Rover. Ashwin Patil joins in. Ashwin, you know, 10.9% margins, it's lower than our expectations, but we were talking about how a higher amount of incentives were given out by JLR to sort of get rid of their old Range Rover inventory. Do you think this is a one-off, this pressure on margins, or is this something that could continue? Because even some of their key markets like the UK have started to suffer.
See, the incentives that they are giving on the phasing out of the old Range Rover should last for this quarter at least. But overall, the atmosphere, the operating atmosphere in UK and US as well as Europe is not conducive for posting strong margins as of yet. And we know that there's a lot of weakness in those markets, and that is leading actually, despite China performing well, despite India performing well, the console business is getting affected because of that. It doesn't matter whether the standalone business comes out with great numbers, because it's contributing a very small portion of the overall business. But JLR is the one which actually matters, and in this quarter actually 10.9% EBITDA margins were not expected. We were expecting close to about 12.3%, which has come grossly below our expectations. So there are 3-4 reasons, as we know, that the phasing out of Discovery, for which higher incentives are given. Second thing is that the forex losses. Third thing is we know that the Brexit is actually very heavily impacting the overall performance. So there are too many levers which are actually headwinds for the margin performance to come better. But seeing the last quarter, we thought that this quarter will be better, if not equal on the margin front. But the company has actually disappointed because of certain macro things which the company actually can't control.
Yeah, I also want to read out what they speak about with respect to their balance sheet. They say that their closing net debt was almost 47,800 crores compared to 27,485 crores as on 31st March 2017, reflecting negative free cash flow at JLR with continued high investments and unfavorable working capital, largely related to the new model launches. So it seems like they've had to incur higher than expected costs on account of new model launches and the transition that they have to do. Prakash Diwan of Altamount Capital is also with us. Prakash, this looks like a disappointing set of numbers from JLR, but we do know that they're transitioning to some of their new models as well. You think these are just hiccups, or is this the reason for the stock underperformance and it may continue?
No, I think, Sonia, I hope these are just hiccups and they're not some sort of a trend that's too deep set, because even the new launches, remember, there's not too much that Land Rover can do in terms of continuously keep on, coming up with newer things, especially the higher end ones. So the Velar has been a success in recent times, but to kind of replicate that, across all price points is going to be a challenge. So I just hope it kind of, starts improving. Otherwise, the stock price will of course be under pressure, and the company will also not get that kind of attention from investors.
I take that point, Prakash, but after a long time, we are hearing very negative or weak commentary from the management as well. It's quite stark in the press release. They talk about how the free cash flow in the quarter was a negative 5159 crores. They talk about higher investments, lower operating profits, and adverse working capital in JLR is all hitting their free cash flow. And also how some of these markets like UK, US, etc. are facing quite a bit of a hit. What do you do as an investor in Tata Motors? Because it's been a frustrating period for investors. The stock has fallen almost 30% in the last 12 months or so. Do you book out and maybe look at other lucrative domestic, stocks like, say, the two-wheelers or the car makers? Or do you stick with Tata Motors hoping that this is just a transition phase?
No, I think this set of numbers is definitely a little bit of a worry, Sonia. You're right. I mean, the kind of expectation management, if any, that the management is trying to carry out by sounding the street and investors at large of, so many things that will not go well. It's a bit too many, So what seems like happening is they are setting the tone for probably more disappointment to continue is what I read between the lines. And if Brexit is going to impact them negatively, that's going to be a big body blow for which it might take a while, before they really come out. And, the other options available for investors, definitely I agree. But generally what I feel is that the auto OEM space is going to be under a little bit of a cloud, including Maruti and all, unless something dramatic happens positively for them. So whereas all things look good in terms of sales commentary, sales numbers, but they've definitely run up so much, and I don't see any reason why Tata Motors would probably run up. So I would wait for a quarter more definitely to buy into Tata Motors, and if somebody is holding a good.
Sure. I think we lost you with Prakash. I'm going to come back to you in just a few moments. Ashwin, come in on the financial details or the balance sheet details that the management speaks about, where they talk about how their free cash flow was negative and, higher amount of investments because of new products is hitting their balance sheet, etc. This is something that we all know, but the fact that they are stating it out loud, that it's a concern for them, would that worry you? And what would your view be on the stock now?
See, balance sheet concerns are, are definitely alarming. We knew that, but now the management has announced it loud. So I think, yes, there is something to worry about the stock at this point in time. Maybe the investment phase will go within a quarter or two, and but the Brexit is an overhang on the stock, and the phasing out of inventories, that also is a passing phase. So mainly the macros which are hitting the stock, like reducing demand in US and UK and Brexit impacting the European sales. These are the macro concerns which are here to stay for a longer time, I think so. Therefore, I was having a buy rating on the stock with target close to 500. Now I have to revisit that.
That's the question I was going to ask you next. Would you revisit or would you downgrade the stock based on these numbers, and not just the numbers, based on the commentary from the management? At a time when the markets like US, Europe are struggling, they've made a £1 billion investment in new automotive technologies, productions and R&D facilities. So it just seems like the timing of this big investment is wrong because some of their key markets are not doing well. Do you think we could be seeing maybe some downgrades come in as well?
Well, the timing has been continuously going wrong on several things. Because earlier that we had seen just before the Brexit, the management had taken certain hedges, and because the pound went against the dollar and the euro, the company has been continuously reporting weaker margins and weaker numbers. Just we had seen a ray of hope in the last quarter, but again it is back to square one. So again, I think now with their investments coming in those geographies which are actually quite vulnerable into severe macro headwinds. That is, I think, again coming on the back of mistiming. And yes, I mean, if the demand is not there, then what would they be doing over there, investing so much? So that's again a matter of concern. So I think, yes, revisiting the numbers, downgrade, I don't know, because already the stock has gone down so much. We were having buy, but maybe it will be a slender buy or hold from these levels.
Okay. Slender buy or a hold, but disappointing numbers. Sanjeev Bhasin of IIFL is also with us. Sanjeev, it seems like a double whammy or even a triple whammy for Tata Motors. Not only have they made huge investments in new products, but they're talking about weakness across all pockets, US, Europe, and now they're talking about balance sheet issues as well. All this amidst falling JLR margins. Do you think all of the negatives have been priced into the fall that we've seen, or is there more to go?
Hello.
Hi, Sanjeev. Is my voice reaching you?
Yeah. So it's evident from the stock's underperformance that the tailwinds of JLR are now a headwind. And yes, like you said, they've invested a lot in Slovakia and so on, and those things will take time to play out. There was hope that the local CV cycle has turned, so that could have added a little bit of color, but definitely the numbers are much below what the estimates are, and I think that the negative view on the pound and the hedges which they have will continue to act like a headwind. So we think that it is better, on any rally to switch into better other four-wheelers like Ashok Leyland or a Maruti. Tata Motors continues to be an underperform for the time being.
Okay, Tata Motors continues to be an underperform, but what have you made of the kind of balance sheet concerns that the management has spoken about in their P&L? They talk about the free cash flow being negative, 5,159 crores, a huge £1 billion investment that they're making, and that will have a further impact on the balance sheet. Is this, of course, these are issues that we knew, but the management is stating it out for the first time, I think, in the press release. So is it alarming, or is this something that the street was already factoring in?
Yeah, so Sonia, this is not today. You remember about a year back also one of the MDs committed suicide or something like that, and it told you that there was a lot of inconsistency on the management side and what is going on the balance sheet. Now this disclosure will act like a big negative. Already we are facing headwinds on the markets being overbought and so on. And I think the underperformance of Tata Motors plus this quirkiness on the balance sheet should be an alarm for most long-term investors going ahead.
Okay, alarming for most long-term investors. Prakash, would you concur with that? And would you move out? Would you suggest investors move out of Tata Motors because of these issues, not only on the operational front, but on the balance sheet as well? And if yes, what would your picks be?
Hello.
Yes, Prakash, that question was for you.
Can you hear me? Hello.
Yeah.
Yeah. So, hello.
Go ahead.
Yeah. So I'm saying I don't see these are things that were already known, and the company is in a very strong investment phase. So this would continue for at least 2 quarters. I definitely believe you could hold on to it. It's not an ad or a buy at this stage. But there's nothing alarming in terms of what the company is going to. It's transiting itself into a new age luxury vehicle player, which JLR is supporting it very amply with, and I keep on saying the kind of the response that they get from the high-end launches like Velar and all are fantastic. So I would believe give it 2 quarters, it'll probably come back of its own, come back into its own. But there's nothing so alarming that you'd start, worrying about what the management has shared with us in the press note, which was kind of in the making. This was all known. So let's not get too worried about just a new reiteration of the same old investment phase that it's going into.
Okay, all right. Gentlemen, thank you so much for joining us and taking us through the Tata Motors numbers. So the sum and substance is that the numbers are below street expectations. The Jaguar Land Rover business has been weak. In fact, it's a fall that we've seen quarter on quarter in the JLR margins coming in at 10.9%. And the management has spoken about tough conditions in UK, US and the European region. And they also speak about how that is putting some strain on their balance sheet, continues to do that. I expect the stock to open in the red tomorrow.
Let's talk about the sugar prices, because we have been looking at a slight gain onto that one. Remember, in the last 3 or 4 months, it has been a constant decline since the numbers have been coming in on what the sugar production could be this time around. And if you look at the government, ISMA, ISTA, various agencies, etc., they're all putting sugar prices, or rather sugar production, between 26 to 27 million tons, which is nearly 6 million tons more than the previous year. And that has been leading to decline in prices. It has been the associations and mills asking for change in sugar policy, and the government has been collecting data saying that they are waiting for the right time and right manner in which to change it. But we hear from the Food Ministry today that they have proposed to the Finance Ministry to increase the sugar import duty from the current 50 to 100%. The mills also, of course, have been asking to scrap the export duty of 20%, also give some subsidy to export sugar, because the global markets as well are reeling with a surplus, and the international sugar prices also have been trading on the weaker side. So if India in that case has to export sugar, the Indian mills would then require some subsidy, and that is something that these markets are waiting. The expectations also are that you might see the sugar policy changes come in by this week itself, and that has been supportive for the prices. One quick word on the concerns really coming in. One is that the cane arrear concerns are back, because the cost of sugar right now is below the cost of production. That is for the wholesale prices. It is the retail that the sugar prices still are trading at around 42 to 45 rupees per kg. But in the wholesale markets, the prices still hold around 30 per kg. So it's a 15 rupees of a gap between the wholesale and the retail sugar prices.